A lot of tariff talk throughout the show today, probably tomorrow and the next day as well. We'll have views on all sides here. Antoni from the Heritage Foundation is joining us right now, and this is Liberation Day. Welcome to the show. Thanks for coming on. That's the president's term. What do you actually expect on Wednesday in terms of how aggressive? Is it just reciprocal tariffs? Does he go further? Some have speculated now, and 20% across the board. What are you expecting?
I think we're going to focus on reciprocal, but I also think it will surprise a lot of people, the different rates that we see for various countries that we think are friends and sometimes countries that we think are foes, because we forget it's not just tariffs. There are significant non-tariff barriers in place that have made a mockery of so-called free trade, where our exporters simply don't have access to a lot of markets. If you can believe it, it is easier for some of our exporters to access certain Russian markets than Canadian markets. And again, that's because of not just tariff rates, but also non-tariff barriers. And so it will be, again, I think a surprise to a lot of people, some of the numbers that we see, because folks just simply don't realize how much something like a quota can affect an American company's ability to get their products into foreign markets.
Even for those who agree with this approach, most acknowledge that there might be some sort of a bumpy process in the midst of it, right? That there might be some short-term pain for long-term gain, right? Like, I want to put up here the chance of a U.S. recession, which we've heard a number of economists weighing in on the last couple of days. I mean, Goldman Sachs has been getting a lot of attention because they were 20%, but now they're 35%. We have Mark Zandi from Moody's on the show a lot. He's up to 40%. What would you say about all of this? I guess on the one hand, nobody's above 50%. You could say that, but what's your take?
Well, we have to remember the difference between a recession on paper and a recession in reality. Because of the crazy way that we calculate things like gross domestic product or GDP, the more the government spends, the better that number looks. That's one of the reasons why it looks so good for the last 4 years. But if we just take 2024, for example, economic growth adjusted for debt accumulation was the worst year since the 1930s. For those playing along at home, that was the Great Depression. So this whole idea that we can somehow spend, borrow, and print money until we get ourselves to prosperity, that has proven itself a fiction for the last 4 years. And I think it's one of the reasons why, for much of the last 2 years, when we polled Americans and asked, do you think the nation is in recession? You very frequently had a majority of them saying yes, because their own personal financial situation had receded, had gone backwards, and was therefore, you could say, recessionary.
Yeah, it felt to them as if it were. No, that's true. And we especially when you go through an inflationary period, I mean, it's a painful time for people. A lot of people hadn't been through a period like that before. You put something on social media, I want to put it up here, on financial stress that I thought was interesting. I want you to explain it a little bit for people. Say, well, how bad are things, or how bad is it going to be? You say it's not really out of the ordinary, and I think what you mean by that, but let me point it out on the, when we went through 08, for example, obviously we were stressed. That's right in here. So you see a huge spike in what they call financial stress, or the index that measures that. When we went in 2020 it's to recession because of COVID, again, stressful, but this is, where we are in here. So is the point it's relatively normal, but that could change, right?
Actually, even better than normal, I guess you could say, in that stress has been below zero, which is the long run average. You can also see a spike in early 2023 there, and that represented the Silicon Valley Bank crisis and a few of the other regional banks that failed during that time. But it was a brief spike, again, above the long run average. But for the most part, we have actually been below average in terms of our levels of financial stress, and that has been ticking up for several weeks now. And people were saying, well, that must have to do with the threat of tariffs, right?
Right.
Except that it just plunged last week. So, yet again, we see a lot of these tariff fears are overblown. I know one market analyst who uses a momentum trend model in equity prices, and he was pointing out back in December, he thought stocks were far, far too high and that they were going to be coming down. And that was before a lot of the talk on tariffs even had materialized. So, this whole idea, again, that tariffs, which are going to be on international trade, obviously, which is a relatively small part of our economy, that is somehow going to cause everything to come crashing down. I'm sorry, I just don't buy it.
Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.